Today is Tuesday, May the 21st, 2019, and yesterday we looked at the McClellan oscillator, which we said because of the imbalance, the negatives, decliners over stocks that increased was going to go down and get close to the this negative median line here. Well, that's exactly what happened. Well, we knew that was going to happen, but I also said that it was going to continue to come down probably and touch this line, like it did down here, it did here, it did here, and it even went further here and here. What I missed was this little inflection right here. So this move back in February is paralleled by this move here. Then we had a little upturn to the median line, like we have here, an upturn to the median line. Then we came down to this point, we've come down to this point, and we reversed right back over to end up equidistant on the positive side from the negative side. So that's possible what we could do again. So let's just keep this in mind, and let's see what tomorrow is like. FinViz had the advancers to decliners very much like they were on Friday. In fact, it's almost like yesterday didn't happen. If you looked at my balance, I'm down $700 between Friday and today. And yesterday was a horrible day, but today gained back everything short of $700. Everything was green. Some consumer products weren't, and Walmart wasn't in the services area, and a few utilities. Look at technology. Yesterday, technology got hit badly because of Huawei, and now the American government has reversed or softened their stance on Huawei. I'm telling you, Kramer said it last week. I don't watch Kramer very much, but I don't watch him at all. But I saw his tweet, and he said that he didn't trust the market because we were being controlled by tweets. And yesterday had bad news for tech, so what happened? They changed their minds, softened the stance, and tech turned around. It could be the opposite tomorrow. So the Dow ended up moving higher, lower, ending higher. We saw the same in the NASDAQ. We saw the same in the S&P 500 with all the markets taking off a little bit of profit right at the end. But what is disturbing is that the relative volume, which yesterday was about 75–80%, now is more like 60–65%. In the NASDAQ, it's a little bit off, and in the S&P, it was up around 80%. Now it's around 65%. So the relative trading volume was off. Not a good thing. Let's take a look at some of our key stocks. This is a Motive Wave. You know, I always use Motive Wave, and there's a new feature that they've added into this beta where I can tag with these dots, or I can put stars, or I can put all sorts of different symbols, and then I can filter my watch list to only those with stars. So let's take a look at the ones that we're looking at. So the S&P, we had a bounce off the cloud today. We finished just below the cloud yesterday. We had a bounce off the cloud today. Good thing. That means that the Chiku span can run up here to the 8 EMA tomorrow, which would be 28.85 if we're going to continue going up. And we finished the day today higher than the 8 EMA and just below the 50-day simple moving average. This is still something to look at. We talked about that. We talk about this every day. And it's this confluence of a flat cloud, two 200-day moving averages here, and well, it could provide some incentive for a reversal, but that didn't happen today. Next, Apple. Where are we? Here, Apple. Up 2% today. Certainly got news about the technology stocks having some enthusiasm. We had the Chiku span yesterday bounce off of the 200, and today we had the stock close just below the 200. I mean, just below the 200. So tomorrow it's going to find resistance at 186.82, which is the 200-day. Let's put an alert there. And let's see, we want to know when price crosses the 200-day exponential moving average. Caterpillar up 2%. Apple was up 1.7%. Caterpillar up 2%, starting to move into this gap. Now I took this gap off yesterday saying, well, maybe it's full because of this tail and that tail, but I'm going to leave it there nonetheless. And let's watch how it behaves once it gets to the top of that gap, because there's another gap just ahead of it. But this was a nice return for Caterpillar. I like it down here just because I like Caterpillar. They have a dividend of $1.06 that's payable in August to shareholders of July 19th. So you've got time to buy, but that's an awfully sweet dividend of $1 per share over a quarter. That's very nice. So I bought another couple of hundred shares today. Gold was only up a cent. T-Mobile came down. We've closed this gap now, but we came down to test the top of the gap, and there were buyers, so upwards the stock went. WDC, again, technology stock, so we saw some recovery. Whirlpool, our home builder stock, some bad news from the new home buyers are down. Despite mortgage rates being lower, retail sales of existing homes were down. So that's not helpful for a stock like Whirlpool, but we did see a really nice bounce. And what we said is if you bought at the 200 and put a stop below the 200, you see resistance at the bottom of the cloud. Well, now that bottom of the cloud has moved significantly higher. Let's watch for resistance on the 200. Let's say we get a pullback tomorrow after it hits the 200. We might want to take a look at this. So I'm going to put a 200, trigger it. If it rejects off the 200 and does a nice pullback, I'll examine the pullback on a 1 hour or 15-minute time frame, and I'll take a look at an opportunity to move up, because I now believe the new resistance is up here at 136.34 once it clears the 200.